Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate, not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
So we're going to get started here, and Mr. Warren Ellis is on our development services team. He's going to assist in some portions of this presentation, and he has over 33 years in development services with big cities like Tampa and Dallas. So he's been working with us for a couple years now, and he's helping us to push these entitlements and push permits as a permit expediter and director of development services. Most important slide, guys. What is your why? Why would you take your time on your lunch time where everything else is busy, things are flowing, you know, the clock is ticking? There has to be some distinct reasons why you want to take your time, carve out your time, and think about your wealth and wealth creation from a higher level. Is it to shelter and protect your discretionary funds? Because we don't invest with funds that we need. You know, they're not daily living expenses, but anything discretionary is up for putting it to work. Do we want to diversify? Maybe we have a W-2, we have 1099 income, maybe we have some positions in gold or other alternative assets, but we want to keep about 30% of our asset allocation in commercial real estate so that we're diversified. We're ready for whatever storm comes our way. Do we want to have freedom from our job? And then I would say, I always recommend keep your job. I know that there's some gurus and things like that would say, quit your job and go do real estate. Well, that's stupid. I mean, really. I would say keep your job, use it as a tool. You've spent decades building that career, and set a goal, whether it is to replace your income in passive cash flow, or my goal was to double my income in passive income, passive cash flow. So I have 20 years of commercial experience. Now, it's not really a 201k, it's a 401k, but not after the stock market gets a hold of it. So commercial real estate is actually half as risky as the stock market, isn't it? We want to spend more time with our spouse and our family and our children. What does that look like? Is it on the beach? Is it in the mountains? Is it near a lake or a river or the ocean? Is it skiing? Is it skydiving? How do you want to spend that time? Is it popcorn in a movie? You know, more time for popcorn in a movie. We have to really carve out the time to think about, why are we doing this? What does that look like for me? Some of the topics that we talk about on honorsyoutube.com are how to vet a sponsor, the crucial decisions to make, the nomenclature of commercial real estate, the verbiage that we use. And so we teach about that so that you have the tools, and hopefully that decision is, oh, well, all of these things do make sense when we vet the other deals coming across our desk, and we vet Honors Way properties. Honors Way makes the most sense. This is a copy of our YouTube channel, and we have over 150 YouTubes to listen to on demand. Honorsyoutube.com. Right now, if you like and subscribe, then you'll be able to listen to the new updates. We've got a fact-right video that should be coming out. We have directed IRA video that should be coming out, and a couple different trips where we've met with registered investment advisors and family offices, those kind of things. So feel free to like and subscribe today. So Warren's going to help me out with this slide, because as a high income earner, we have all of the trappings of success. It's great. I've also been in the corporate world as an engineer for 30 years, but also Warren, what kind of things should we be looking at in terms of what we want to get rid of from our cycle of a high income wage earner?
Right, like DL was saying, thank you, DL. Like DL was saying earlier in our other discussions, that as a W-2 employee, if you are an employee of a W-2 receiving a W-2, and you're in a high stress position, that can be very stressful on your body, on your family's lives, and things of that nature. And therefore, you are looking at, hopefully in the long term, to use your discretionary income to work for you. If it's in an IRA, if you have cash on hand. So this is a very alternative asset where you can put in that income into an asset such as this that we're offering. Or if you've already worked and you are retired and you have discretionary income that's in your IRA or cash again, you could put that there. So you want to have that work for you. It's lower taxes, it's less risky than the stock market, and therefore over time, as this asset grows, your income, it also grows. And like we have in terms of this particular asset, a commercial asset, you're up to 3 times of your return on your investment, whatever that you feel comfortable after you do your due diligence in investing in this commercial asset. So we believe that it's a good product. Like I believe, like Warren Buffett indicated, is that you don't want to work entire life for someone else to get them wealthy. You want to use and have your money work for you over time so you can start beginning to build wealth. So we believe that this asset, multifamily, is a great asset where you can put your money in and you can see up to 3 times return on your investment. Next slide. Also, too, investing in real estate in this particular alternative asset, can become co-ownerships that will allow you to have 100% passive income. So there's no longer you have to trade your time for money. You're letting your money work for you, and that's what we want to do in terms of allowing your wealth to grow over time. If you are in a W-2, or if you are retired and you want to make sure that your money is growing for you, so over time that you can live comfortably and enjoy your family life, enjoy your kids, your grandkids if you have some, and you can travel as well. You want this asset or other assets to grow for you so you can have your time freedom back instead of working for someone else.
To
Next
the
slide.
green, invest with us on a team effort. One of the reasons that we have the Honors YouTube channel is to help you learn more about commercial real estate along the way. You invest passively with us and learn about commercial real estate along the way. So let's go. Why multifamily? There's a lot of good data analytics here. Talks about declining home owner. We'll move these pictures a little bit. And our tenant types don't want to own, but multifamily is not my favorite. It is a place where everybody needs a place to live. And you've heard me say that, of course. but we're not just talking about multifamily C-class conversion or B-class conversion to a little bit better, because those margins are slim. The profit margins on the rents are slim. They can't raise the rents, and they're not going to get to a Class A luxury. And the margin on the appreciation is very slim as well. So those profit margins on that kind of Class C and Class B multifamily, I want to warn you about, is very slim. So they're offering maybe 1.2, 1.5 times your money. And hopefully it's a good asset. You have to do your own due diligence. My perspective is going to be always to be coming from the Class A luxury, because our property in 22 North sailed through the pandemic and our tenants, our 30-something tenants, just paid the rent. So this is important to distinguish why multifamily, but why Class A plus plus or why Class A luxury multifamily. On top of that diversification, we've got units that are diversified. You have 100 tenants paying that rent and that mortgage, not just one. Hard assets don't walk away. You could drive by them. That's a great thing with commercial real estate. And commercial real estate is half as risky as the stock market. So if you have anything in the stock market, 401k, I would encourage you to get it out, and you're safer outside of the stock market. Why Texas? Hey, Warren, is all Texas the same, or is Dallas the best market in Texas?
From our research, Dallas is the best market in Texas so far. Yes.
Yeah, Houston is soft. Houston has been soft, especially in multifamily, for about 2 years now. It has another year. Austin has been soft for about a year, and Dallas really has softened a little bit, but it'll be soft for 6 months and it'll pop back. So not only why Texas, but all markets are not the same in Texas. Dallas has the highest paying rents. Dallas has the highest paying wages, and the professionals are making a lot more. Everybody's moving to Dallas. So we want to be careful when we're looking at properties going by our desk, that we're distinguishing the market and the submarket. Now, our Class A plus plus, our Class A luxury tenants have high paying jobs, good credit. They consistently pay their rent on time, and it was recession proof is what we saw in 22 North. So we only saw rent concessions or rent specials one time in 22 North during the pandemic. So they just paid, and our tenants will stay 5 or 6 years. You don't have that year and a half turn. So that saves on money too, saves on staff, advertising, all kinds of downstream effects on that. So we want to get in the best market. We want to get in the best submarket. And rents rose in Dallas over 6% over the last year. But in our submarket, they rose over 11%, which is almost double. That's the Class A luxury. Across the nation, rents were very flat, very flat. So we want to be in the best market, the best submarket, and that takes research. So we have a comprehensive checklist to understand, and we actually have a commercial real estate due diligence checklist that we can send to you. It's a PDF, and it says about 10 questions of, what kind of questions do we want to be asking? How to vet a sponsor. Hey, DL, have you ever filed bankruptcy? Wouldn't you want to know that? And I can honestly say I've been in commercial real estate 20 years. And no, I haven't. I couldn't cite these $10 million notes and $10 million loans if I had declared bankruptcy. I couldn't do that as a developer. DL, have you ever lost investor money? No, not in 20 years. So I can honestly say that I have never lost an investor dollar, even to my detriment. I had a broker one time who, a bad broker, and lost about $100,000 of an investor's, and I ended up coming out of pocket for that. So even to my detriment, I've never lost investor money. So we want to be talking about these hard questions. We're also not set up with 10 co-general partners with 3 years of experience, that's where trouble comes. We don't have that experience. So we're understanding the market, we're understanding the business plan, and we have all these in the deal room. The purchase price. Do you think that getting our properties off market helps in the returns that we're able to share with our partners? Yes. So on one of our deals, 23 acres, I bought it for $6 million, but it was already worth $9 million. So we bought it with equity in the property. So easy to raise capital against that equity, not against the debt. We can't raise capital and give collateral against the debt. So right now we have $11 million of equity. Purchase price. We want you to ask the hard questions. Do we have any contingencies in the underwriting? Is it conservatively underwritten? Do banks love it with 7% vacancy rate? Whereas the banks want to see 7% vacancy rate, but in Dallas, the vacancy rate is 2 to 3%. What are we putting in the pro forma, in the underwriting? We put 7% because we want to leave that contingency or that buffer for risk litigation. Experienced team. Well, I don't know about anybody else, but we have 400 years of commercial real estate and construction experience. And right now we're about 2 to 4 weeks from pushing trees. We stepped back, we took out 2 underground parking garages and saved $2 million, worked that plan back through the city a little bit. And yesterday we got an approval on step 1 of a couple step process and we're halfway through step 2. So we're about 2 to 4 weeks from pushing trees. We're very excited about that. Super excited. But, we saved $2 million of build cost, and it was worth it. Warren, do you understand the differences? And even if you don't, then you're a smart professional. And we can talk about active investing versus passive investing. If we already have a job and we're already overly busy, maybe passive investing is important. If we have a bunch of extra time and we also have the training and the education to do active investing, and some people do. Some people we talked to at Directed IRA over the last couple days, they have a single family home or 2. And I tell them, use your cash for your single family and bring your IRA to us. Now we offer $150 off your first account with our special sauce IRA, and that's honors $150 for that code. So get with us and we'll help you get connected to our IRA company. That it's arm's length transaction. So that's, active versus passive. What do you think about those two stances, Warren?
I think they're great, like you were saying, in terms of when we were at the alternative investment conference. You heard a lot of discussion regarding the active versus passive income and what are the various assets classes that people can put their monies in. And like you were saying, you were stressing basically when you're talking to other individuals and investors to keep their cash if they're doing single family and use their IRAs or their towards investing in assets such as ours or other assets. So you were definitely stressing that to the various individuals who we spoke with at the conference.
That's right, because they want to keep that tax deferred or tax exempt status of that IRA, 401k, solo 401k, Roth, all different investment categories, but you want to keep that tax deferred status by not going after an exempt transaction. It has to be put into somebody else's deal. Thus, we get back to, okay, how do we do due diligence on these people? Are they findable? We're all over the internet. We want to make sure that we're doing due diligence. What have they done in the past? Well, 20 years of commercial or 30 years in planning, with our city. So those are the kind of questions that we want to be asking and thinking through. a couple slides here about our properties as we finish up. So 22 North luxury apartments were 240 units built on 11 acres and Class A luxury. It sold in 2021 for a profit of $22 million. And we have leveraged all of that nice engineering, civil, landscape architect, interior design, all of those documents and all of the work, and we've leveraged it into our property in Dallas here, which is 346 units. So we've leveraged all that, which is great. We want to make sure that owners, or the sponsors, sometimes they call them, have a good track record. Picking the right team, picking the right sponsor is crucial. So we have Carrasco, who I've worked with 17 years. We have our Director of Development and Planning. We have our co-developer, who has about the same net worth that I do, but also 1,500 townhome builds and several commercial multifamily rebuilds. And I have 20 years of commercial real estate and all kinds of asset types. In transaction history, over about 350 million. And that is over 10 million square feet. So we want to make sure that we pick the right, we're owners. We talked about conservative underwriting, bank underwriting. We have contingencies throughout. Make sure the inflation rate is not too high. We don't want to overvalue our property. Talked a little bit about our team, so let's talk about our contractor. Our contractor is one of the best in multifamily in the state of Texas. They are also HUD certified, and they have licenses in other states to build. We have a construction project manager that faces the superintendent on the lot. Independent reports. So general contractor gives us one set of reports, and our GC owner's rep construction project management team gives us another set of reports. So it's like having two attorneys. They watch each other. It's great. We have interior design, which is phenomenal. We have renderings from the interior design that we're going to show you real quickly. And we are using one of the best civil engineering and landscape architect, environmental engineering firms in the state of Texas. So the best of the best. And let's go over here to these renderings because they're just beautiful. And I want to show them off. Pictures over here. Okay, so you all saw the renderings of the pool area, the common area that Shauna did for us. Beautiful, detailed, gorgeous. The exterior of the buildings is beautiful, with different looks and feel, and then different facades of the buildings, just gorgeous selections. A lot like 22 North, a little bit different for the Dallas area. And a water feature, let's see, this is a water feature grill. It's not on this slide, but that's okay. Outdoor grill. And our tenant type for the apartments is 22 something. And the condos will also be able to use the common area of the apartments. So that's another 60 units that we're doing as well, Corinth Living condos. And we have registered investment advisors and family offices already ready to start funding the condo project. We're very excited about that. The amenity building, we can go ooh and ah here. This is so pretty. Definitely not the engineer. I didn't do this. So this is the leasing office, and we've got client-facing, tenant-facing desks here. We have the oils that are going to be in the common areas around the elevators of the buildings. And this was done by a local veteran, a disabled veteran. And we've got those scattered throughout the property as well. Very nice touch. And then go right out into I think that's the outside. That's the pool area. Yeah, pool area. Now this is a point of sale machine for the grab and go. Little grab and go market. If there's a popcorn emergency in the middle of the day, somebody needs a Diet Coke and popcorn, they can come down and we have another profit center that way. This is the collaboration room, and actually this goes all the way. It does close up. But beautiful. Remember, our tenant type is 30 something, but it also will work for our collaboration room for our condos, the 55 plus active living. This is 3. Did I skip one? Yeah. Okay, good. Okay, so this is a rendering of our mail room, also with package lockers, and we'll have some tall lockers as well for people who want to drop off their laundry, dry cleaning, and pick them up the next day in a locker. So we'll have those amenities that are concierge like. Also, we'll put your groceries away, just kind of like a hotel, concierge services. We'll put your lettuce and your groceries away in your apartment if you'd like to have that service. Another profit center that we want, that we keep those professionals working. That's what they want to do. They want to work and pay their rent. Okay, so here's our grab and go. We've got these getting bidded out now. All of the amenities are being bid out along with our construction budget, our final bid. And with the tariff conversation that everybody had at the big spring of the year, we only saw about a 2% differential in our hard costs. And so everything settled down as we thought it would. But if they need some ice cream or some pizza or some yogurt or something, they can come down and get it from us. And of course, we'll double the price, and it'll be a profit center that comes in as extra income on top of the rents. So in our net operating income, that increases the net operating income that we can share with our investors. We'll have a hot sauna and a cold plunge. So sauna area is beautiful, and also the cold plunge in the fitness room. On the third floor of the amenity building, we have an investor's loft. So all investors are able to come and visit our properties a couple times a year, stay 2 nights, fall in love with the area, and do some due diligence, complimentary. It's a beautiful suite, 2-bedroom suite, and you can see the area, beautiful. Prestige at Mayhew, here's some quick numbers for you. We have very high returns on this Class A luxury. The net present value of 346 units, Class A luxury 174 million. Annual cash flow 2.6 million out of the net operating income of 8. So we took our gross potential rental income, we subtracted the utilities and the expenses, got our net operating income, and you can see why luxury. The profit that we are able to share with our investors is higher. So good to hang in there, right? The deal period is 3 years, very strong. We also have Corinth Living Condos, and just a brief about this, 60 units on property that we own, and we already have the medium part of the capital stack ready for that. The lower part is private investors. The medium part is equity partners that can write a $10 million check. We have that lined up. And then the top part is the construction budget. So we've got the 3 parts of the capital stack already aligned for 60 units. 30 of the units are condominiums that we can sell and throw off cash flow into the property, and 30 multifamily for 55 plus active living. I love this. Don't tell anybody. This is a great asset class. We're diversified in one building. Don't tell anybody. Big secret. So we acquired the land. We tripled the value. We're a couple weeks from pushing trees, and the final result will be property of 346 units on the apartments at a value of 174 million. That's about 3.5 million an acre, which is great. We will have done our job, and that's our job. We do the work, you get paid. And we're right in here. We could do a cash out refi. We don't know what the market looks like. in 3 years, right? So the owners of good properties will keep the property and let it cash flow if the interest rate is too high or something else. That's the beauty of commercial real estate. You have cash flow and you have appreciation. And even if you don't have cash flow, you have appreciation. So our properties are appreciating right now because of the work that we're doing. And we want both. We want cash flow and we want appreciation, but we're safeguarded. If maybe we have cash flow and it's not appreciating in the market right now, that's a common occurrence. That's why we're shooting for both. And that way we are safe. We're safeguarded. Make sense? So we talked about 22 North. We talked about the Prestige at Mayhill, and we talked about the Corinth Living condos as good examples. And if you would like to know more, you can go to morefreedom.com and just opt in and start learning a little bit about us. We have a couple resources for you. We have our YouTube channel, honorsyoutube.com. You can subscribe to 150 videos on demand. And then we have 22 North. You can look up this property, gorgeous property in Austin, Northwest Austin. Went very well by selling it in 2021 for a profit of 22 million. Okay, you can do your due diligence, right? And we have our website, The Prestige at mayhill.com, where you can look up our team, meet the team, and do your due diligence on us, all of our experience. So I encourage that. Check us out. And then we have our deal room. So on the apartments, on the vertical fund, we have raised about $2.6 million out of 10. And we just opened it up maybe 2.5 months ago. We have pictures of our 22 North, which we're building like. We have a new term available, a test the waters term of 13% per annum paid for 18 months. It's debt position versus the equity position of up to 3 times return, which is in the PPM. So just briefly, we have the highlights of the property. We have the market information. Everything is on one page in the deal room. So get access from Rochelle or Edward or Dr. Adam or Anthony and get access to the deal room. We also have raving fan testimonials. We have profit generator worksheets says, hey, I want to bring in $100,000. How does that work? How does it become up to 3 times return? This is a deep dive video of Mike Carrasco and I talking about our development experience. If you want to look up the parcel information, hopefully their link doesn't break, but yep. Who owns this property? The Prestige Build LLC. This is our address. This is our property. So you can take this parcel number, the property ID, and you can look it up for yourself. Everything is fully disclosed. We've got plans, civil plans, architectural plans, stamped plan, the first couple pages of our stamped plan. We've got the legal description. We've got our approvals. Ozzy, we need to upload that new approval when we get it. The traffic impact approval, all of these approvals are fully disclosed in the deal room. Environmental reports, everything. So feel free to look it up. And here's the property right on, whoops, that's not working. There we go, up on the 35. Okay, Medical City, medical office buildings right here, and a brand new detention area and overpass. The city has put millions of dollars into our area recently. It's great. So we're going to be around our phones, 817-409-8795, 817-409-8795. Or you can call the office and get an appointment.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by at any time. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, the Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.